Hope you're doing well. I hope you had a good week this week. I hope you're all healthy and safe for the most part as well. Let's go ahead and read today's legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So I hope you enjoyed that. I want to say we do have a special guest today here for you. I'm going to go ahead and turn the screen over to her. Anne-Marie is not, this is maybe your second or third time, right? Doing one of these events. So
yes, third time.
I have to admit that this is one of my favorite events that we do for like all of the webinars. And I have to admit that you're also one of my favorite guests to have doing this.
I appreciate that. It's always exciting to be here.
Yeah, well, it's good to have you.
It's always fun. Love to talk about the markets.
What are you thinking about that? Let's. I know what are you looking at now, Dow?
This is actually the S&P.
Okay.
And we will see. This is of course we've got the add-on sitting in here, but here was the original sell zone. It was on the 21st of February. And we've broken down fairly significantly. Now, using the buy zones here, whenever you have a buy zone off a negative moving average, the only place it's going to go is into prior resistance or prior diamond patterns that have appeared in the past near our old support areas, right? So that really gave us this. It broke down. So if we're looking at buy zones like this, when everything is moving down for moving averages, for those of us who do have this, just remember that that's a conditional buy that says, hey, listen, you only want to get involved in there if you have every intention of getting out at resistance because the broad trend is down. This buy zone triggered on the 25th of March. And what it did over the last couple of days is something fairly interesting, but very mixed in general. And so what it's really telling us is, listen, we're buying off of a very steep fade. And so it's almost a relief bounce. And so when we have moving averages that are down, the chart is going to bounce into prior congestion areas, prior areas where we see resistance, and that could be two different levels. It could be all the way up here at 2,700, it could be down here at 2,650. And so what's happened over the last couple of days particularly is that we've fallen back underneath the moving averages, and yet our momentum indicators are positive. And so that tells us we're in a cross current. And really, in the broad market, there are two different types of folks thinking about things right now. There are the guys who are desperate not to miss the bottom. And so they're saying, oh my gosh, they'll call advisors. The folks that I sort of spend time chatting on the phone with are people who will advise hedge funds and have those kinds of services. And they have $1 trillion altogether under management, and they're all telling them, listen, this is a dead cat bounce. You don't rush it. Wait for the fade. And so people are continually trying to sell this top because, of course, the economy underneath is in a very unsettled place.
Mhm.
But markets aren't the economy. Markets are people with deep pockets that are looking forward motion 6 months ahead, and they're saying to themselves, all right, if I get involved now, 6 months from now, will I still have my low, or am I looking to add back to that space? So there's some folks that are saying, yep, I absolutely want to go long, and then there are others that are saying, wait, there's another shoe to drop. I'm in the camp that there possibly is another shoe to drop. And the litmus test is this 2442. Now, my thought was, hey, listen, we have got to close above that area or we are going to have some trouble. So a lot of times when we're traders and we try to say, hey, how do I position myself in this market space? I would say to you, listen, go back to a weekly chart and say to yourself, this week, did I close over last week's high, over last week's close, or am I inside of the candlestick motion of the prior week? And wouldn't you know it, we are inside of the last week's candle. So there is a measure of weakness sitting here in the charts as long as we sit inside of this candlestick body. On Monday, we're either going to see gap down, gap up, or some little measure in between. Holding the low of this past week, which is 2447 in the SPX, that's going to tell us, hey, if we come into that zone, we're going to see if buyers can come. And if the buyers can hold the edge, we've got ourselves a shot to the upside. But right now, it really is a coin toss because there are funds that go, I am not missing out on this bottom because I missed out on the last couple bottoms. And there are others going, this market is a dumpster fire and the economy is going to have tremendous downturn. This is a dead cat bounce and we are headed way lower. And that's given us a cross current.
Yep. Mm-hmm. I know we were talking about can we back on the just as we're getting ready. I think we can kind of rule out on a daily chart looking at this to turn into a V.
Absolutely.
Because
no doubt.
These don't go sideways like that, right?
They definitely don't.
Do you? I was looking at a couple of things on today, and I was just kind of wanted to get a feel for you. Do you kind of have a feeling that we're going to go back and test these lows, or do you think we're going to establish new lows? Are we going to get a W, or are we going to go lower than that?
So my thought is that there is plenty of downside pressure to create a brand new low. That's the underlying current. My gut says that we've made a bottom. This is what I do know, though. Any kind of savage dip down under this kind of really sharp bounce up, any kind of really steep bottom is going to be a wick. It's going to look just like the weekly pattern in terms of saying, wait a second, you see how that had a deep fade and it bounced sharply? Our fades are going to have those kinds of bounces on them because the guys who've committed to buying this bottom expect us to double bottom at the very least. At the very least. And so what they're going to do is watch for that. If it fades, they're going to look for momentum to shift the balance, and then they're going to run it up the flagpole again. And so for us, 2150 might be that next zone, or it really might stay at that 22, whatever number this is, 2285 or something like that. This is a great big Fibonacci that I drew from I don't know, bazillion years ago. So let's see how far back I drew that. Okay, so I went from the bottom here in 2016 to the very top, and I did a retracement. 78.6 is right here. 70.7 is a level, a Fibonacci level that people love to buy these days, and it's showing up a lot. I don't know, that's a real Fibonacci, right? 50 is not a real Fibonacci number, but we use 50 because it's closer to that Gann number approximation that's 25, 50, and 75. So down here, easily we can look at this and go, well, obviously that was old resistance. It became support. We could really come down into this zone at 21.31. But when you're in an I don't know what the market is actually going to do, the question is, how do you lie in wait and how do you strategize? And the way that we like to do that, potentially in my mind, is, all right, think of the things that are going to be the very best and the very worst. So things that are going to be the very worst, everybody's talking about what's happening with Wynn and what's happening with all the other gambling stocks really taking a tumble. They think, JP Morgan said something like the guys in Macau that have that great big place, they're going to have zero revenue relative to broad motion. It's sort of like yesterday I read the weekly report. You know, when they say movie theaters last week grossed $225 million for the week ending da-da-da-da-da. Last week, it was $5,176.
Wow. Yeah.
Yeah.
So the economy is hurting, is what you're saying.
Yes.
The in-person economy is hurting too.
Oh, absolutely. And so the market, what's making traders very upset is that terrible numbers come in, but the economy does not seem, but the market does not seem to respond in the negative ways. And it's because the traders are forward thinking 6 months down the road, trying to get themselves set up properly for the next quarter and the next 2 quarters of motion. And so when we are traders coming into the market, we have to realize that that's how they're positioning. They're not looking at the economy numbers now, but what forward pricing might be. And my thought is they might be a little too optimistic. And so, you know, you can look at things like movie theaters as a whole. You can look at the cruising industry. You can look at airlines. All of those guys, remember, there's this story about pent-up demand. Well, if I normally fly every month from, you know, Chicago to Florida like I do, but all of a sudden I'm landlocked and I can't move for 4 or 5 weeks, I'm not going to take 4 flights in 1 week to catch up, right?
No.
So that demand destruction doesn't turn into pent-up buying. And so these guys have these serious boulders to get right over in order to either get back on top or even perform like they did before.
You talk about it. I was looking at some numbers today in terms of like the projections of the outbreak and kind of where they're looking to kind of. So just some things I found interesting is where the article I was reading or the graph I was reading had things peaking on 4/16. That's when it's going to be as horrible as it will be, right? And it was pretty grim at that particular point. I think that particular day, they projected 3,000 Americans to die just that day, right? But then you have kind of this parabolic fall that kind of goes into May, where you're just kind of dropping down that cliff. Right. And then by the time you're in June and July, there's just that curve is just almost gone.
Right.
What do you think that will be in terms of if it kind of stays along that timeline? And Marie, do you think that we'll bounce back relatively quickly? We'll start going to movies again. We'll start going on these fights again. do you feel like that's a timeline that would be good for a market bounce?
Okay, so I think the market will bounce ahead of the
I
actual
agree with
recovery.
that. Mm-hmm.
It normally does. And so what we have to do is sort of what we're seeing right now, and that is, does bad news make the market go down, or do traders seem to ignore it? And they're really ignoring it right now.
Yes.
6.5 million, right? I think they're ignoring bad news.
Well, that's one thing that kind of stuck with me as I was kind of reading through articles. I read somebody says, well, the best time to buy into a bear market is when the market stops reacting to bad news.
Yes.
And I thought that was pretty telling. We had horrible news, and the
Yes.
market's just not going anywhere anymore.
Yeah.
Unemployment came out.
Mm-hmm.
The only time it really moved was earlier this week with options expiration and the end of month and quarter stuff. It kind of went down a little bit. That was also the month that Trump got on and he was talking about 250,000 dead Americans, right? Mm-hmm. But even then, you'd expect a much bigger move.
Yeah, absolutely. So, well, at the very beginning of this space that we're in, maybe 2.5 weeks ago, 3 weeks ago, the volatility index was up at 90. Now it's fallen all the way back to 48 or so. Remember, we had 3 or 4 days where we were limit up, limit down, limit up, limit down, limit up, limit down. In the futures market, it was insane. And thank goodness our ranges have tightened. We're almost moving half as much as we were 2 weeks ago. So we are settling down. Can we continue to settle down? Next week, with the new jobless claims, we had non-farm payroll at negative 701,000 this morning. That's a huge number. Market did not. Yeah, the market sold off a little, held right back, and it's really so organized. The selling has been very, very, very organized, and so I still am hopeful that if we hold the lows like we're looking to right now, we'll be in good shape. We can see these are the last 3 days of the S&P, and you can see we have low, high, higher, low, higher, high, higher, low, higher, high. It's awful because it's retracing each candlestick, but it is telling you, listen, when you come back on these lows, you could potentially see some more buying pressure holding up. And that, in the combination with traders ignoring the bad news, says, okay, where do we look for strength and where do we look for weakness? The grocery stores are going to have strength because that's the only place that we can spend our time and money. I literally went to the store and saw people perusing the aisle. I mean, they were in masks or whatever, but they're perusing the aisle, and you get that feeling like, oh, after this, I got to go home.
So, yeah, right. I drove to the office yesterday to get equipment just so that the webinar would go well today. And I was like, I wonder if I remember how to drive. Right?
It is. It's crazy. It's absolute. And me, I enjoy being at home, but for me, even it has just been incredible. So let's say these things do take until May. Most types of viruses of this kind have this 90-day cycle event associated with it. And so let's say it drops off just like we think it is. How are people actually going to respond? And this is where I think the market is getting a little bit ahead of itself, because there's certain folks that are totally freaked out about it, and there's certain folks that are not freaked out about it at all. And the first group is going to be very timid about reinitiating themselves back into, okay, I go to this every Tuesday, I go that every Thursday, and then things will slowly start to ramp up. But in the washout, how many businesses are going to be shuttered? And then what does that do with REITs? What does that do with, so all of these things are going to start getting reevaluated when the first quarter that this gets to show up, right? So this will be next quarter, we'll be seeing all of this. And some of these things are going to be very, very, very shocking in general.
What do you think? What do you say to the person? Let's just say that it's not necessarily a trader. There's a lot of people that kind of fall into this camp, but they're like, okay, things are beat to crap.
Yes.
I'm supposed to buy when there's blood in the street,
right.
Or all of that kind of, there's buy when people are scared. There's all those kind of quotes, and those quotes exist. Do you think that? Do you have advice for somebody like that they're just maybe just buying in because they know they can afford to hold on to it for a while? They know it's going to go up. Do you think it's a good time to be considering that kind of a strategy?
I would say, depending on your timeline, then yes. If you've got dry powder, you're very fortunate. What you want to think about is who's absolutely beaten to the floorboard that shouldn't be and is likely to get bailed out. And so I would look at a cash burn. If you want to look at something that gives you some statistical information about what that company is looking like, and then you've got to think about, well, who's going to survive? Now, for me, I've been on the cybersecurity bandwagon for quite some time, and I continue to be there because I think that's the next shoe to drop. The number one page in the business section in the Wall Street Journal today is financial criminals finding their heyday with da-da-da-da-da. I mean, this loan stuff, it's bringing criminals out everywhere because somebody wants to pull something over on whomever that they're trying to get squared away. So they're going to try and attack from both sides. They're going to try and attack the consumer, and then they're going to try and attack the bank or company that is having some trouble. So my thought is, any deep dips you see in cybersecurity, that would be Symantec, CyberArk, CrowdStrike. There are several of them. I really like them. Wait for the big dips, and on those days, nibble a little bit. It doesn't mean you go in and buy 3,000 shares. In this environment where we could make a brand new low, if you've got dry powder on a big day down, you go in at the open and you buy 50 shares. You buy 20 shares. Your job is to acquire when you can make sure that your risk is the absolute lowest. Even if your time horizon is a little longer, you still want to look for a low risk event. Do I think the market's going to rebound well? Yes, it is, because big money is going to front run the actual recovery. And so we are likely to see a fairly good springboard. There is a Fibonacci formation called a bat. And this bat has a fade that looks a lot like this. So let me just show you this. If you're thinking about, where is my, I don't know if I need this one or if I need my projection. Crud. I'm so bad.
You're okay.
All right. So here we are. This formation, see the 38.2? This is the exact formation
I noticed it bounced off that level.
Right?
Yeah, okay.
The 38.2 comes in, it comes down to the 23.6, and a bat gives us a rotation that brings us all the way back up to an 88.7. So if we have 88.7, that takes us right back into the initial gap where we broke down. Isn't this a very interesting formation here? Right at the top, right to the bottom, right at the 88.7.
Honestly, I found it a little bit more interesting that it would be called a bat formation.
Yes. I think it's because the head of this is very small and the wings are very large.
Mm-hmm.
So the
Yeah.
edges are like that. But it's crazy. I mean, why do we actually call them walkie-talkies? We could have had such a much better name than that for those sorts of things. And then a bat is one of those things. But yes, so we could absolutely springboard higher. What
Well, you've got
people are
so
going to
much
be looking
money on the sidelines. Like you said, everybody's
exactly.
the
Exactly.
government. See, I'm extremely, like, for the short time, I'm extremely pro volatility, right? Because it's just going to be crazy for a while.
Yes.
But you've got all of the feds, all of these international governments, basically saying we will do whatever it takes to get this market up, right?
Yes.
And you talked a little bit about monopoly money, and that might be what they might be willing to turn our currency into monopoly money to get the market to go up. But then you've got all of this money that's just sitting, waiting for this to kind of shake down.
Exactly.
So,
and there's a lot of big money like that is actually waiting for this to shake out. And so a big thing might be, well, what do I want to see time after time? And I, again, would slip to a weekly chart. And if you really want to look for stability, you want to watch for your candlesticks not to be this big. You want them to tighten up a little bit. See, they fall and they're big, and then they start tightening up a little bit, and your moving averages begin to change shape. When that sort of thing happens, you're in much better shape to move up. The more that your chart retraces its prior formations, the more difficult it is for price action to be stable and people to get involved. The next thing you could do is say, hey, I'm going to watch for the VIX, and I'm going to see when the VIX drops to 35 or below. Once it gets to 35,
go ahead, finish your thought.
No, go ahead. Once it gets to 35, things will start stabilizing a little bit more.
We have a question from YouTube that I was interested in. Renee asked, are there institutions short selling the stocks now, or are they buying?
Combination of both. A couple of few days ago, we had forced liquidation. If you can remember the day in the chart that we sold everything off. We sold gold, we sold bonds, we sold equities, we sold commodities of all kinds. Everything was flushed. Forced liquidation means that the manager at the very top says, hey, you've hit your threshold for loss. These people give us their money to keep and be fiduciaries and be very responsible about holding them. We have got to cut our exposure to the market. Now, people are sitting in the space after forced liquidation, and they're saying, crud, I cannot believe that the market is flattening out here after I was forced to sell, and so I'm going to start nibbling in. At the same time, there are a lot of people who still have not sold tech. They're still hanging on to their big tech positions. The next big flush we have, there's going to be forced liquidation in tech. That, I think, is going to be where we really see that bottoming formation, because tech has held in a space where it should be selling off, because CapEx, certainly software systems and equipment, CapEx is going way down. People are not going to be spending on tech with the exposure that they thought they had the ability to do as the year goes forward. And stocks have not, the tech stocks have not faded off like they should.
Cool. Do you want to look at a stock with us?
Oh, yeah, absolutely.
How about RCL?
Oh, great. Absolutely. Let's
go. We talked about this one last time.
Yes, we did. How long ago has it been since we were together?
Not too long. I think we talked right after the bottom formed. I think it was like a couple weeks ago.
Okay,
Like,
great.
I think it was
Great. So
right.
that's
Yeah.
really right after the forced liquidation occurred.
Mm-hmm.
Yes, that's exactly right. So let's take a look at this particular chart. It's going to be in terrible trouble. It already is, right?
Mm-hmm.
Now, I don't know if people are going to stop. Listen, I am one of these people that I love cruising. When I cruise, however, I really sort of stay in my cabin and I sit out on the balcony and I enjoy the time at the sea. I don't really roam around around the decks, but I love cruising, and so this event is not going to stop me from cruising. But there might be people that go, "Hey, I'm not going to cruise ever again. I can't believe that. I'm never cruising again," or whatever.
Right
But
now, we have
these
people that
guys,
can't get off of cruise ships.
I know, I
Like,
know. Oh no,
I
listen to
laugh,
this.
but it's not that funny. But
Yeah, the USS Theodore Roosevelt, to have a Navy captain relieved of duty is a huge thing. I mean, he's either going to be sent his papers or put on a desk. And he had all his men on this ship.
okay.
Everybody was supposed to be quarantined. He stopped in Vietnam and he let them all off.
Oh, wow!
Yeah.
This was in the Navy.
Yes, the
Oh,
USS
wow!
Theodore Roosevelt. Yeah, he just got relieved of his ship. They came and went, "You're gone." Put
I had
everybody
not
back on
heard
the
that
ship.
story.
Yeah,
Wow!
it happened
It's
a decade
probably,
ago.
yeah. No, I hadn't seen that.
I'm
Crazy.
sure everybody's crazy to get off, though, right? I mean, they're stir
Mm-hmm.
crazy. All these people trying to get off of these ships. But here's this type of industry has got just the biggest cash burns that you could possibly imagine. Yes, they hire people for nothing. And so those guys have all been sent home. Tons of people lost their job there. But the overhead just to keep that ship afloat and to keep a flotilla of them is very, very expensive. That's why they have to have cruises that are in and out and turn ships around within 4 hours. So here's what's going on with this guy. It's showing positive divergence, right? This is bouncing and it's at a higher low, even though these things are bottoming together. But slope is master and commander. And what
Mm-hmm.
this chart has been doing every single day essentially is making lower highs and lower lows. And see, a pattern is going to break the first time it stops making lows, breaks to a high, and then holds the retest. Right now, this is a resistance bar at 35. If it can't get up over 35, the chart has serious continued problems to the downside. It absolutely has to get up and over that edge. Can they go out of business? I don't know. I don't know.
It's possible. Yeah.
Are they some of the strongest ones? I do think they are, right? I would imagine Carnival would go out of business before Royal Caribbean, but I don't know. I
Yeah.
really, really don't know.
Yeah. Um. Is there anything that you wanted to show us? Any kind of
Yes,
stock ideas? Okay.
I do. So let's think about things like, let's take a look at gold. A lot
Okay.
of times, gold got very, very beat up. This is in the forced liquidation space. And so what happens here is all of this turns to paper money, right? Even though gold is supposed to go up when the market goes down, if you're in the market and you have gold and if it's in your portfolio and you have other things that are going belly up and you need to close out your winners to pay the margin calls, you're going to sell everything. And gold got decimated. It's begun to bounce, but several days ago, it gave us a resistance zone that then stopped us out. So again, here's how we look at this. Here's the buy zone event. It pushes us up, gaps huge, and then it tries to fill in the gap. So gold, I think there's room for this one to run. A pullback should be something to see. In the big picture, this is still paper. So people who buy gold and think it's going to hold up against the market, that might happen unless the selling gets super dramatic like it did in times past, and then they're going to sell it off as well. So gold becomes a trading vehicle, and my thought would be, as it pulls back into support around the 148, go in there and see if you can get yourself a 135 or 140 to 145 in the money call spread. And so you're deep in the money. If you do it every single month, taking that deep in the money, you're going to make 20% if you do it as soon as the month starts. So for April, we've got 2 weeks left until expiration. Then we've got May. So if you wait for a couple of weeks and you see this holding its measure up and it's up in front of its moving averages, going like this, go deep in the money and buy the call spread that'll give you about a 20% return every 35 to 40 days. And as long as you are sitting above your moving averages and your moving averages have upward slope, that's going to be a winning trade for you.
Renee, a couple things from YouTube. What since I'm looking at it again. Renee says Carnival has plans about their debt. They will hardly go bankrupt.
Say that again about Carnival? What did she say?
She said Carnival has plans about their debt, and they will hardly go bankrupt.
Okay, so what they actually did was shift their offering in some of their bonds this week.
Okay.
And I think they're going to have trouble with cash burn. I really, really do. I do. Here's something also interesting I want to talk about is what happened to Amazon today. So Amazon is sitting in a very messy patch, right? You can see a buy zone here that moves us up into resistance. And now we've got a sell zone right at support. So this chart is getting ready to do something fairly big. Now the pullbacks, the last move upward, all the way from down here has been on less volume. And that's because, in my mind, this volume is associated with a buy to cover, meaning you've sold it so you're short. And so the way you get out of that trade is buying it to cover. So you buy to get out of a trade. And so this volume has really gone down on the buy. What we have to see is, can we close a day under this 1886 in this current formation? If we do that, any bounces are going to be a sell zone for this one. This chart, to me, looks like it's breaking down. And it's breaking down where everybody thinks it ought to be holding because, listen, these guys are the winners. Are they not? Everybody else is shut down and you're buying everything online. And so these guys should be the winners, but they're buckling under the volume because their workers are also sick.
Yep.
So I think this is going to be a problem.
So Danny in YouTube says, what are your thoughts on FedEx? Shouldn't it do good because people are getting everything delivered? Question mark?
Yes, that actually is a fair premise. So let's take a look. Have I done FedEx? Yes. All right, let's take a look at FedEx. Okay, so FedEx is in fair shape. They got sold out with everything else. Notice all the price patterns are being formed sort of the same way. Everybody's moved up savagely and now they're down. FedEx looks in good shape. So again, there is a warning signal here about the type of motion that we could potentially have. We really could move off of this 110 and fall right back into the 90. So how do you want to position yourself here? What this has done is told us, listen, you find a buy zone. As soon as you see the red diamond, you've got to take profit. Absolutely. The red diamond gives you profit. Sell zone opens up here. That's another red diamond. That's old resistance, going to turn to new support. It absolutely could bounce. So what do? You've got to think defensively in this market. And so the way to think defensively is, wait, FedEx is going to show some strength. Obviously, I don't know if you saw the news, they're really upset that their drivers don't have, adequate coverage from everybody or whatever. But, our FedEx guy has been great. We stay away from him. He drops the boxes there. Nobody comes up to him at all. So I think they're going to be just fine. And even though I have 2 people in my family with COVID and a couple of friends, only one of them is sick. But, I actually have had a friend who died from the flu, and she was only 35. And so I know that flus can be very dramatic, but these guys are likely to recover. They are likely to recover simply because they're positioned to. On top of that, their biggest expenditure is fuel, and fuel is the lowest it's been in forever. So hopefully they bought it up. All this noise here, all this chatter about oil going through the roof, it's up, I don't know, 50% since Wednesday. So it's really, really up very high, and it's from news. But these guys are going to do okay. But how do you position yourself? Do you want to say, okay, I'm going to buy it at the 109 and I'm going to give myself a $15 stop? I say no. Don't give yourself a $15 stop. How about saying to yourself, listen, what if I could invest and get a 20% return? I'm going to go to the 90 in the money calls. I'm going to sell the 95s. It's going to cost me $4 maybe. If I look at May's, or I look at April's, might be a little bit more expensive, but if you look at May's, it'll be maybe $4, maybe $3.85. You're going to make $1.15, which is an amazing amount of money. That's 30% return on the call, and that's even if the price drops, just so long as it holds 95. So to me, defensive positioning in the market with the players you think who will hold through the motion is what you have to do. But buying straight out is still a precarious place to be in my mind. And I do not love buying stocks when they're sitting underneath the moving averages that I find to be important.
Do you think, Renee wants to know if you expect a double top in gold at 1900?
At 1900, you know what? If it gets to 1700 and it can get up over there, it's going to break 2000. The reason for somebody is absolutely positioning everybody to sell at the 1700 level. If they press that out of the way, this chart is going to go up. But again, it's a paper money event, so you need to look at that engagement as an ATM machine. Hey, I'm going to stick my card in, and when I pull it out, I'm going to take this money and go. I'm not going to sit in there and hang on to that because it is paper money. It's not real gold, right? So the next time we see a nice big deep fade in gold, that's a good place to potentially acquire it. But staying in here for a long time, I mean, this last liquidation really taught me some lessons.
What are you looking for out of the next several weeks?
I'm looking for markets to stabilize. I'm looking for volatility to come in just a little bit more, but I expect the next quarter and a half to be in a wide sideways patch.
Yeah.
Full disclosure, I actually said that when we were at about this level, when it was maybe the 9th, 10th of March, I thought, we're going to chop around here. And it went and gave us a brand new low. My supposition is that in general, we have made lows. And even if we dip a little lower, we're going to bounce immediately. But we are going to sit in a sideways patch before the buying really begins again, because at some juncture, they have got to get strong numbers in terms of what damage has been done to whatever company is there, right? And REITs, restaurant REITs, oh my gosh, you heard the Cheesecake Factory called their guys.
Yes,
and said, yeah, we're not paying our rent. You know, if you have a restaurant REIT, whoa, I mean, all the REITs I think are going to have a bit of trouble. I think, all drops in the market are about liquidity. And last night, the Fed had zero bid at the repurchasing window. That means they came there and they said, hey, we're here to lend you money. And the banks are supposed to go, okay, who wants to borrow? Because we'll be that interface and we'll exchange our dollars for treasuries. And so we will have this support edge that we can lend you the money because we've got the backstop for the Fed. And everybody said, I'm not borrowing anything and I'm not lending anything. That's not good. Mm-hmm. And yet the market did not close at the lows, which I find to be, again, another example of bad news getting shrugged off.
Mm-hmm. Yeah, that's great. Hey, Anne-Marie, any final thoughts? That was great. I really love having you on.
Thank you so much. I want to be, the bearer of good news versus bad news. And I think we are really coming close to the edge of this motion. If you're a trader and you really, or an investor, and you're thinking about what you're going to do with either the dry powder that you have because you liquidated, or you have something that you want to manage, try to limit your intake of news so your bias doesn't slip into being so negative that you can't see where the bottoming formations are coming up. That's happening a lot. If you spend too much time focusing on the news and everything bad, it's going to cloud your vision in the market. So go look at some pictures of kittens and puppies. That's what I'm giving you next.
Hey, Greg, we would like to order an outro of kittens and puppies, please. All right. And if people want to get in touch with you, where's the best website to go to? Or
thetradingbook.com or Twitter. You can see me on Twitter at Anne-Marie Trades. You can find me at thetradingbook.com, and I'm around often, happy to answer any questions. And thank you so much for having me. Really appreciate it, Jeff. Really, really do. It's always fun.
That's great. Thanks, Anne-Marie. And Greg, I hope you're ready for that outro of Puppies and Kittens.
Take care.
Thanks, everybody. Stay safe. Stay well.